Mm-hmm. This one. Concentrated.
Artem? Hey, what's up, bro? Hello, my friend. Hello,
What's
hello,
up?
my friend.
What's up? What's up? How are you doing?
You know, I'm doing okay. I'm doing okay.
Why okay? Why not good?
I mean, I'm doing good. My portfolio's seen better days, but I'm doing good.
That's what the first thing I thought. Why it's not good? Why it's just okay?
I mean, I'm all right. My portfolio, there a bomb went off in it though. That's for
Mm.
sure.
Yeah.
But
First of all, let me say congratulations for your first year anniversary. Coming there soon as well.
yeah, hopefully I can turn at least $1 of profit. But hey, I'm staying invested, and uh as long as my cash flow stays up and I keep buying in, it's gonna be
Mhm.
okay. I'll buy it all the way down and then all the way back up.
Just dollar cost average. Yes, you never
Right.
know the lowest points, the highest points. So simple as that. Yes, it might be tempting to just buy when you see the dip, let's say so like what 5% or something, and then it's like goes down and goes down and goes down.
Yeah. You know what's funny? Like, I mean, my portfolio was up 30% at one point.
Mm-hmm.
I had like 2 grand. I was up like 2 grand, and now it's down like 5%. Like my whole portfolio is down, like the entire thing. Uh, I've learned a lot,
Mm-hmm.
obviously. You know, I'm investing for the long term,
Mm-hmm.
but maybe a couple stop losses would have been a good idea on a few of them. Maybe not on the ones you want to hold forever, like stock, but maybe on some of the ETF, that might
Mm-hmm.
have not been a bad idea to have a stop loss so you could still take some profit
Mm-hmm.
on some of them. But anyways, I was watching a video. Uh, TD Ameritrade, the company.
Yes, yes, of course. Mm-hmm.
So they have a really good education site as far as like videos,
Mm-hmm.
tons of free videos for new investors. And I've taken some of their classes in the past, like their technical analysis course. But they had an interesting video about recovering investment losses and this thing called the drawdown effect. Have you heard
Mm-hmm.
of the drawdown effect?
Not yet. I will leave it in my browser so I can read about it
Yeah,
later. Draw
yeah,
down.
yeah. Drawdown. Here,
Okay.
I'll type it into the chat.
Yes. Yeah, I already got it. Yes. Uh, but it tells me about hydro. Okay, now it's about investing. Okay, yeah, I got it. I'll read about it and most likely will make straight to the point video later.
Ooh, nice. There you go. There you go. So basically, it's like this mentality of having to catch up. So whenever you start to lose money,
Mm-hmm.
you start to be more risky trying to cover your losses
Yes.
somewhere else. And then
Mm-hmm.
now you're doing more risky, and then that doesn't work out, and now you're really screwed. So it's
Mm-hmm.
like, and like definitely at one point, I just saw all my stocks just go down. And I was like, man, pull everything out, put it into crypto or whatever. And I was like, that's that thinking. That's the thinking right there of
Uh-huh.
it's greed. It's greed where
Great.
we see you see one place going up, but your other place going down. So you're just always trying to chase things, and they can lead to some disastrous results. So I thought it was a very good point because it's definitely natural to think that
Mm-hmm.
way. Definitely natural to think that way. But
Well,
it's a bad idea probably.
this is kind of looks like the extension of catching falling knives. I guess if you heard about this, yes, stuff. It's like kind of what I mentioned before, like when you try to buy the dip and then it just goes even lower and lower. So this drawdown effect, it's like the extension of this basically catching knives. But yes, like I always been basically telling since the beginning and everything, like I always was trying to focus on this since the beginning when I started investing and everything. The hardest part and the most important part about investing, if you remember, is the mindset. Is this thing, it's not about like selecting stocks or anything like this analysis. You can just buy broad market index, VTI, VOO. You don't even need to analyze anything. But this ability basically to stay invested, to keep buying, to not panic sell and then just buy Cardano, like all these kind of things, even though Cardano is like up 50% and stuff. But this idea is that the mindset is the hardest in investing. Right now, it is like perfect confirmation of this thing. And even though it's not even like the recession, or it's like not even a correction yet. Yes, stocks are down and everything. Like before this, we had a flat line, basically in the stock market. But right now, it starts to basically decline a little bit. But like imagine same thing like last year happened, and we lost like what 20%, 30%, almost 50%, like literally 1 month. This is when people actually started panicking and everything. So right now it's not as bad as 1 year ago. It's okay. Right now it's basically the confirmation that you need to have investing mindset, that maybe if you invested in some, I don't know, like Palantir and stuff like this, which is, I have no idea why people love it so much. Just numbers doesn't make sense. I see Palantir, I see all this, I don't know, Vuzix, Teladoc, the one that Kati Woods was speaking yesterday, I joined the meeting, ARK investment stuff. I just see their numbers and it just doesn't make sense. I see quarterly revenues, let's say, so annual revenues, and it's like just not, doesn't make sense that whatever they're saying, this is like the future, like Teladoc is the healthcare company, the best company in the world, blah, blah, blah. Vuzix, I know all this. I just like, well, these are all just the promises. Numbers cannot lie. If I see that the company is so bad in terms of balance sheet, income statement, negative operating margins, negative net income, revenues are not increasing like they always promise us, and all this kind of stuff, it just doesn't make sense. Like, of course, I can tell my YouTube channel is going to be 3 million subscribers next year. I'm going to give you all the facts why it should reach $3 million subscribers. But if I'm not producing anything, I know, like viral, if I'm not producing anything of high quality, it just doesn't make sense. The number will not lie eventually. I don't know what's going to happen with all these companies, Palantir, Vuzix, Telador, whatever, like they're investing. So, but just once again, numbers doesn't lie. If I see that the company is in negative net income for like 3 years straight, if I see that the revenue is not increasing like they've always been promising us, like triple digit growth or anything like this, I just don't see it. Just that's it. Numbers cannot lie. And right now the economy is technically recovering, and they were always like feeding all this like promises that as soon as the economy starts recovering, we will be growing and stuff. It's not happening once again. Economy is reopening, they're not growing as much as they're promised. So that's it. So I have no idea why people so much forcing this Palantir and all this kind of stuff. I guess it just became a YouTube thing to talk about these companies, and just people cannot already back down, what I was called. People cannot just turn around against their principles. They've been feeding their subscribers why Palantir is such a great stock for like half year straight. Of course, they cannot make video right now. Palantir is a bad company. I'm selling everything. Of course, they couldn't, because people subscribe, majority of people subscribe to them because maybe of Palantir and everything. So they just have to keep going with this, and it's going to be better soon. It's going to be better next year. It's going to be better in 2 years. But like, I just don't see any improvement. So this is just speaking about these popular hyped YouTube companies. For me, yes, my portfolio is also a little bit damaged. My main portfolio is still up, maybe like 12, 13% since I started investing, the one which is more or less value / growth oriented, but more value, let's say. So second portfolio is around 0, but this one is more or less growth oriented. So basically it's around 0. So let's see if these companies will recover. The only companies which are risky and the ones which are negative for me right now, I mean strong, big negative, Corsair, renewable energy, and ARK, obviously. All these companies. The renewable energy it's down, but its balance sheet, its income statement, its financials are good. It does not have negative operating margins, profit margins, or anything like this. So it is a good company. It's a strong company from financial statement standpoint, but it just having difficulties right now, basically, obviously, because the whole market is having problems. Corsair is outstanding company. Like the newest financial report is pretty good.
Yeah. They crushed their earnings.
And previous quarters, previous years, everything is so far so good. So this company is just going down because the whole sector basically is going down. But this company is still financially strong company. When I see that the company makes sense from financials perspective, from qualitative, quantitative analysis perspective, so I see that once again, people prefer how it's called Corsair products. They're like RAMs, they're like keyboards, they're all this kind of stuff. PC hardware basically in general. So I see that this company makes sense, and I'll just basically keep buying most likely this one.
For sure.
And other companies like the ones which no one talks about, these are the companies that are basically more or less keeping me afloat, let's say. So like Nucor, the one which is steel manufacturer, it's my biggest right now company in my portfolio. Basically average return. Obviously I was buying Nucor not just when I just started investing, but I bought some shares in the beginning, then I bought some more shares, then I bought some more shares, and average return on Nucor is like almost 190%. So right now, today they're like minus 5%, so it's maybe less, but still 150% return, which is company no one talks about. Caterpillar is the same, like 80, 90%. All these companies that no one talks about, but these are the companies that help me stay afloat for now. And
Yeah, you gotta have the unsexy ones sometimes.
exactly. So Buffett, I mean not Buffett, but his mentor who wrote The Intelligent Investor, I forgot, Benjamin Graham. Benjamin Graham and Peter Lynch in their books, they were saying that you need to invest in boring companies, basically. Companies that no one talks about, no one knows about. And basically that's the confirmation that all these things, that they still work. No matter what these popular YouTubers, I know I don't want to even name them, not to give you the temptation to start watching them, but all these popular YouTubers, they're like, Buffett is like his history, his dinosaur, and his methods do not work anymore. That's it. Here you go. Here's the confirmation that all the basic principles that have been working for 100+ years, they still work. They do not stop working just because some YouTubers who started investing like 2 years ago, they found a way to invest in Tesla and they got 800%, and now they think they're like gurus. And this is like their annual just 1 year return. Just think about Buffett. I know like what he's like average return for like what 60 years or something. Average annual return like what 20, 30%. So basically that's all there is to it. And yes, obviously we just see the rotation right now from technology to value sector. Main contributors to this are the commodity prices. Obviously like lumber, what else? Steel, sugar, I don't know, I have all this kind of stuff. People just looking for more or less safe investments. Let's see how it goes. But obviously I'm not selling anything. I will just basically just keep buying. Next month I'll just keep buying. And I am really looking forward to see if there is going to be a correction or something like this, like maybe like 10% at least or something, so that maybe then I will open the US dollars account, and this money that I have that are just basically literally on very low yield savings account. Like I literally get maybe like 12 cents every month or something like this, which is ridiculous. And so I am looking for this type of correction, so I can just basically put all this money into just VOO, for example. So I don't even need to manage this portfolio and just let it grow on the side track while still focusing and playing around with my boss first two portfolios. So that's basically what I see as for now. Nothing to worry about. It's normal.
That's good, man. That's good. I love to hear it.
So you also shouldn't worry. Markets cannot grow forever. If markets grow forever, then annual return will not be like 10%. It will be like 200% or something. So everyone will invest this if returns will be 200% per year. It's normal. Sometimes recessions or corrections or just even flat lines, they can last for years. And for us, it just basically started going down maybe like last month. Maybe this is the beginning of something big. Maybe this is just temporary 1 month correction because everything, these cycles are going up and down very quick, obviously because of very easy how easy it is to invest at this point. Just download Robinhood and that's it. So most likely the cycles will be shorter than it's in the past, but eventually it will recover, obviously. I don't think we are expecting anything similar to Japanese stock market crash. I don't remember. In 80s, I think it crashed. And even until now, it was not able to recover completely. So like for 40 years, it's still trying to recover for 40 years or something like this, approximately. So I don't think American, US stock market, anything like this is expected from the US stock market, but eventually, most likely, it will recover and everything will be good. And we will see again YouTube videos, best stocks to invest, best and this, because basically everyone is genius in bull market. But now is the time to see who is the real, let's say, not perfect investor, not master investor, but now is the time to see at least who is like decent investor, to say the least, who at least can maybe save capital, maybe at least get 1-2% per month or anything like this. Now is the time, because so far all these YouTubers who are making like, this is my 20% gain, Buffett is old, all the videos they are posting right now is like market crash, what to do, selling all stocks, like all this kind of depressing and panic videos basically, and all this like stuff. So that's how I see it. Don't worry, keep invested. Invest in proper companies as always, invest in value companies, invest in strong, financially strong companies, do all this analysis, fundamental, qualitative, quantitative, and you should be good to go. If a company is strong from financial standpoint, if it has strong balance sheet, strong income statement, and it has strong quantitative future, basically the people will be demanding the products of this company. Qualitative, I mean, there's no reason for this company to go bankrupt or disappear. Right now, just the opportunity to buy a little bit more discounted stocks, and that's it.
Right. Yeah, I think my wife's account, she's been investing longer than than I have, so she's probably still positive, I would assume. But I'm definitely back at the drawing board for me. It was sad seeing ARK crumble so hard, and I was like, damn it, Kathy, damn it.
Yes.
But you know, and I worry about it, how long it might take to come back too, and I worry about it falling even further, to be honest. But I mean, I guess this is why we said we could buy this aggressive shit because we're young and we had time to write it out, and I guess this is what we meant by it.
Exactly.
We're living it right now. But yeah, so I don't know, like, obviously these things are good because it challenges my thesis and it makes me examine what I'm really doing. And I've definitely had to find my footing in this investing this year. But I have a good idea of what I want to do moving forward. Obviously, I can't sell anything or rebalance anything on my portfolio because it's all negative right now. So that would be the dumbest thing I could do, is start selling stuff and moving things around. So I'm holding everything in my main one myself, but when I contribute more, I think what I'm going to do, and I know that we've talked about this and how we need to be more focused on growth as young people, but I think in my Roth, I'm just going to set up kind of some dividend plays and just get the drip going and see what compound growth does there as far as over time with those kinds of stocks. And then I wanted to show you real quick with my M1. Here's the link. After, I think I showed it to you last time, but then I went and read your Patreon article about, just portfolio construction and allocation and the buildup of it all. And so I went back and I adjusted it. So here's what it is based on some of your stuff. I just want to send that over to you. I think you can click on
I see it. Okay. So
All right.
what I'm looking at, it's yours?
Yeah, so what I'm gonna do for my Roth is just buy, kind of like, maybe some VOO and then some that Charles Schwab HD and just play some dividend and like market, kind of play it safe with the ETF there. And then on M1, I want to hold my own stock portfolio. And this is the basic buildup of mine so far. And these are all products besides Tesla that I use in Berkshire. Everything else besides Tesla and Berkshire, I'm a customer of, as far as I buy it and use their products and stuff like that. So that's my allocation right now. I don't know what you thought about that.
Well, just on the first glance, obviously, I will need to go and see each company individually, which we don't have time to do it right now, I would say. But just at the first glance, most of the companies are so far so good. Majority of them are on my stock watch list. I have even some of them in my portfolio as well. And I remember researching some of them just recently. And yes, these are the companies that we use. So once again, qualitative part of the analysis of these companies, most of them are very good companies from this standpoint. So far, so good.
I think I have the allocation a lot better than the first time too.
Looks more or less diversified. Yes, that's for sure. And so since you showed me also yours, I also decided to start making my pie charts and all this kind of stuff and be more in control, let's say, so how my investments look like. And because, well, simple, our brokerage is extremely simple, doesn't have anything like this. But I also like to do things manually, let's say so. So if you want, I can show you the, let's say so, portfolio tracker that I created in Google Spreadsheets. And I think it looks pretty cool. At least I like it.
Yeah, let's see it.
So,
and then what have you been doing on crypto?
I just bought Ethereum. I don't remember if I told you last time, but basically that's it. So basically, this is the Google spreadsheet, and I'll just go tab from tab.
Nice.
This is the every time I buy every month.
All right, hold up. All right, how often do you rebalance and all that? Like
Every month, whenever I dollar cost average. So my buying date is basically 6th of months, 6th of May, since 6th of June, 6th of July, and so on and so on. If 6 is the markets are closed, I basically do it on the first available day. So let's say, so if 6th of June is, let's say, so Saturday, I just buy on Monday, which is 8th of June, and that's it basically. So these are basically checklist, what to do whenever I'm buying, like update balance, update date, remove colors. This is just for me, basically. Don't need to see anything, not to make any notes or anything like this. Then is the main working table. Let me just minimize this stuff. Okay, this is just main working table where I see what to buy, what to sell, exchange rates, and these are all the things that are basically a portfolio percentage. But this is just the working stuff, which is basically I'm not showing also to anyone except my Patreon people. This is basically just for me. It has everything on my companies, how many shares I have, how many shares I'm planning to buy, total portfolio percentage, change percentage from the previous month, dividends, dividend date, ex-dividends, yields, and all this kind of stuff, and approximate annual dividends in Canadian dollars. So like right now I'm getting, looks like 700, almost 700 per year in dividends.
Damn, that's fat.
But I reduced my dividend yield so much since the beginning because I started with extremely conservative type of investing. My average dividend yield when I started was a little bit above 4%, if I'm not mistaken. So basically, if I kept the same strategy, the same mindset, I would say right now my dividends would be basically twice the amount, like 1,400 per year. But basically that's okay. Like we already been talking about, we're young, we can afford being more aggressive, be having more growth companies. So that's okay for me. 2% average dividend yield. It's still a little bit more than just investing in VOO. I think right now their dividend yield is around like 1.5. So far so good, basically for me. This is data. Also, basically, I'm just showing you in ascending order, and I will keep the most interesting tabs until the end. So right now I'm just showing you just working stuff. This is just data stuff. Also nothing to see here, nothing to learn here. This was just I was calculating basically. Let's say, so whenever I was buying shares of companies, how much they cost at that point, and what happened if I bought VOO at that point in time, like dividends, basically annual dividends and all this kind of stuff. Also, nothing interesting, nothing to see here, because now it starts cool stuff. Okay, this is auto tracker. This is already interesting stuff. So this is Google spreadsheets, and they allow you to basically use Google Finance formulas, which basically update things automatically, like prices, PE ratios, market capitalization, average purchase price that I had to calculate basically myself, as you can see the formulas, and total return based on average purchase price. So basically,
Yeah,
here
that's dope. That's a good tab right there.
yes, and all these green and red cells, they also update automatically. Total return, basically almost everything updates here automatically. So here, as you can see, Lockheed Martin is like 3%, Store Capital 42, Intel -4, -4, Bank of Montreal, so on, Southwest almost 90%, Nucor is 170%. Like I told you, basic materials, and it's pretty ridiculous how much it's growing. And yes, the ones which are suffering the most, like I told you, renewable energy, Corsair and ARC -12%, but majority of them are in green, so that's good for me. These are my cryptocurrencies. They are not updated. They are not updated automatically, except Bitcoin and Ethereum. Cardano is not updated automatically because Google Spreadsheets doesn't have Cardano integration yet, but Bitcoin and Ethereum updates automatically, yes. Bitcoin, since I bought up 2%, Ethereum 10%, Cardano 55 approximately, 60% since I bought it.
Nice. There you go.
So far, so good. Then it has price opened, daily change in dollar amount, daily change in percentage amount, then annual high price, 52 weeks high basically, and then percentage from 52 weeks high. So how far away from the growth, how far away is the price right now from annual high, and then annual's low price and how far basically.
Wait, how are you getting those little graphs in there?
And these are months performance, 6 and year performance, and this is the formula. But
that's badass, man.
No, they just look good, but because they're so small, you cannot see anything. But yes,
yeah,
but
it's
they
cool
look good.
though. It's cool. I mean, I like them for sure. I like to visualize.
But yeah, they just help to visualize at least the basic. Obviously, there is nothing you cannot do any technical analysis or anything. They're just for looking good, basically. And I know everyone likes the graphs the most, even though they have almost the least functionality. But that's okay. So, and these are the graphs. Yes, 1 month, 6 months, annual performance for every single stock, basically. And crypto obviously is the most interesting ones because they just go up. Obviously, since Cardano doesn't have any integration, I couldn't do anything for Cardano. So anything which is light blue is basically data unavailable.
What's dude? So that's really why I'm not so sad, is because at least I'm making some good gains with Cardano.
Cardano is
and like I think I'm up 66% on my Cardano, and then Ethereum, I got it in a little bit early, and I'm up, I think, over 200%. It was crazy. And then at least 100% on Bitcoin. So like all the losses that my from ARC and everything and from everything else, I at least made up with some crypto. So like I think I balanced out, but I'm really glad that I diversified and didn't just have all stock, because otherwise this year for investing would be no good for me. And at least I can look at one of my portfolios and smile, and
Yes, exactly. No, almost the same idea for me, but because crypto is just 3% of my portfolio, even though Cardano is like 55%, but Cardano is just 1% of my portfolio. So this 55% almost didn't do much to my overall portfolio performance, but that's okay. That's okay to see more green than red.
Guess what? I got my first Cardano from staking. My first full one.
Same last week. Last week I got from staking already. So far so good.
First Feels full good. One. Yeah, man. I'm trying. I would love to get to the point where I could get one a week. you know, and get 4 a month. That would be awesome.
That sounds like a plan. Just keep buying then average DCA into Cardano. Eventually
Yep.
it will happen. And
Yep,
so,
sure.
and now the most interesting part, at least for me, the charts. And I did 6 of them. And I'm still watching videos, as you can see here, like how to build portfolio trackers. I have like lots more to see. So, but
Nice, man. Yeah, that's good. I haven't looked into any kind of videos like that. I just kind of started making my own thing, but it seems like you can do a lot more cool stuff with it for sure. Like some of that one right there, that video looks really tight.
that's what I'm gonna find out soon, because these
That
are
one's
the
awesome
like
looking.
1 hour videos, long videos, and I just, whenever I'm done with everything, I just put them and I see what I want to. I'm obviously not copying them exactly. If I see something that I like, I just add it into my portfolio and do the same color schemes more or less, and basically done with this. And so basically now are the charts, my pride and everything. So total portfolio value, self-explanatory chart. Since the beginning of investing goes up, but this includes deposits. This is basically a total portfolio value. This is not portfolio growth. This is just basically value as it is, including everything: capital gains, dividends, referral bonuses, deposits, everything. This is the diversification, the one which I needed the most, because this helps me to visualize sectors where I have most exposure. Technology is okay for me because, like I said, this is the growth potential and we are young, so we can be more exposed to technology. Technology is 22.9% for me. But then I saw that industrials for me is almost more than 20%. And I do not want that much exposure to industrials. Like, why would I have 20% in a single sector?
That's a lot for industrials.
Exactly, and that's why I will slow down investing in Lockheed Martin and one more industrials I forgot, but I will maybe whenever because Caterpillar, I just love the company. I see this machinery everywhere every time I'm driving around. Caterpillar is the one company from industrials I will most likely keep for a very long time. But Lockheed Martin, like I said, I will slow down. I don't think I will ever buy more shares of Lockheed Martin that are super expensive, like 300 plus per share. And one more company, okay, just let's see it here. Southwest, Lockheed Martin, 3M, and 3M. And 3M is another company that I will slow down buying 3M. Yes, they're a nice company. They make everything, like you can see the pencils, whatever, like stickers, scotch, all this kind of stuff from 3M, but masks. But just too much industrials, as you can see. 20% of the single sector in portfolio is just too much. And the rest is more or less diversified, around 5%. ETF is more because, well, ETF is like 30 companies. And cryptocurrency, as you can see, 3.4%. Okay, so these are first 2 charts. So far, so good, like them so much. Then total portfolio versus total deposits. This basically shows how effective I'm in managing my money. So orange line is all the deposits, just deposits, which includes deposits, referrals, dividends, if I'm not mistaken, and what else? And I guess that's it. So these are just pure deposits. And then total portfolio value, basically to see if I'm multiplying my money or not. And then you can see it here, like as of May, it's 32,000 and deposits 28,000. So basically I made like what, almost what, $4,000 basically in 1 year. Okay for me. Not as much as if I'll be investing all in on Tesla or Cardano, but that's okay. I'm slow and steady. But this is already more interesting portfolio. This is my portfolio, which does not include cryptocurrencies, versus S&P 500 portfolio. So this is what the previous tab that I was showing, data tab. Basically, every time I'm buying stocks, which is like 6th of May, 6th of June, 6th of July, I said, what if on every 6th of month, I will be buying VOO ETF, basically, yes? So not if I bought VOO in the very first day and just let it grow. I specifically did the same thing. What if I dollar cost average the same days, the same amounts, but instead of individual stocks, this will be S&P 500 portfolio. And as you can see, it was more or less the same throughout the whole time. Sometimes I was making more money than S&P 500, but you see this rotation started approximately in April. And now my non-crypto portfolio is underperforming S&P 500. But well, that's why the rotation happened, and that's why we're so heavily exposed to technology sector. But eventually, I expect it to be higher than S&P 500. This is pretty useful graph, and this is what never YouTubers will show you. YouTubers will never show you that they underperform S&P 500, even though majority of them do. But well, I don't care. I'm just investor. I show the truth and stuff. So yes, I underperform S&P 500 as of for now. And the last two graphs, also very cool ones. Total gain loss per position. So blue is the total equity amount, and red one is the total gain or loss. So as you remember, the ones positions which losing me money right now is renewable energy, Corsair, and ARK investments. So blue shows how much I have invested in them. As you can see, in ARK, I have invested $4,200. And this shows me how much ARK lost me. So I lost $500 on ARK. And at the same time, Nucor, or where is it? Nucor, okay. In Nucor, I invested $500 in Nucor, but it already made me almost $1,000. So this is also pretty good and self-explanatory, very helpful to visualize type of graph. And this is for every kind of like all my stocks and cryptocurrencies on the right, but because cryptocurrencies are so small, you almost cannot see them, but I just still included them. And annual dividends, I also calculated basically how much dividends I was receiving every single month. So I started investing. I was about to get like $400 in dividends every year. Then, as you can see, I was buying. And then at this point, which is like September, starting September, I decided to focus more on growth companies. So that's why my annual dividend income was decreasing. And starting like December, I again started buying value companies. I started again buying companies that pay dividends. Plus I was buying ARK investment, which also pays annual dividend just once. And eventually, as you can see, that's it. Right now, if I don't buy anything else, right now I can approximately expect around $600 in dividends every year. And basically that's it. These are all my graphs, which I'm very proud of. I think they look cool. I like them a lot. Helps to visualize. Maybe I'll put them on Patreon one day. If you want, I can send to you right now, so you can get some ideas, or if you want, you can get some cool stuff out of it. And that's how I do. Still have a couple of videos to see about portfolio.
What I would do once you're done kind of tweaking and getting it all like set up is like duplicate it, make a second version, and then just put a whole bunch of like dummy figures in there. And then release that to your fans. That way you don't have your own personal like money in there. But yeah, man, I mean, I would definitely be interested in getting a link to copy that worksheet. And I think if you just made a second version that wasn't your own info in there, you should look into giving that away to your Patreons. I think that would be cool.
I was thinking about this, yes, but because I'm still building it, as you remember, I have like 3-4 more videos to watch, but I think it's more or less, it's like I feel like it's 90% done, because I have
working on it, keep finessing it.
Yeah, of course. Every single time I'm rebalancing my portfolio every month, I think about what to add, what to remove, how to make it better. So yeah, of course, I will be twitching around, playing around with this every single month. But yeah, eventually I was thinking about, including a Patreon version of this and just releasing it for people to use and stuff like this. And so far, that's it.
Awesome, man. Well, it was nice seeing your new developments here. This is really cool stuff, and I appreciate your time.
Anytime, of course. So you're finished classes, looks like already?
Yeah, I'm on summer break, man. So I'll be chilling a lot. We need to hang out once a week and get our weekly investor on still.
Okay, then no problem. Every single week, 2 p.m. Every single Wednesday, 2 p.m. as always. Then
no problem. I'll put it in my calendar.
Okay, then have a good day and see you next week then.
Yes, sir. Take care, friend.
You too. Bye.